Before we get started, there are two things that I want to mention real quick. Number one, if you like the videos, hit the subscribe button and hit the thumbs up. If you don't like the videos, just tap that thumbs down, and it's okay too. Let me know why you don't like it. And then the second thing is that we're considering broadening our horizon just a little bit in the financial spectrum. And so we've got 3 different ideas as far as future videos, and I'd like to know if you would like to hear about them, or if you have an idea of a video that we should do with regards to finance. So the first one is 3 signs that the stock market is getting wobbly. Would you like to know those 3 signs? And then the second is term insurance versus permanent insurance. Which one is better? And then thirdly, the last idea real quick is different ways or the different strategies that you could save for a child's college education. So look, if you have an interest in any of those or have some ideas of your own, I would love to hear from you. Put it in the comments section below. Don't forget to subscribe if you like it, or thumbs down if you don't. Let me know why. Welcome to the HI Humble Investor Bull Bear Market Report. We're going to talk about the S&P 500 and then look at the shorter term trend, and then we're also going to look at the longer term momentum of the S&P 500, and then we will get into some of the nitty gritty of this week's operating plan, what we're looking to do. So first things first, S&P had a great week, up 2.87%. You know, really it couldn't have been much better for the bulls. Market came down on Monday, and then basically the entire week, the rest of the week it went up. So good week for the bulls. But does this mean it's over for the bears? Are we right back into the bullish structure of the market? No, we still have negative momentum. Momentum is still negative on the longer term, and we really still haven't gotten past those highs in the S&P 500 to really change the dynamic or the trend, the longer term trend of the S&P 500. So let's look at a chart of the S&P 500, and then we'll get into this week's operating plan. And here's our chart of the S&P 500. This is a daily chart. I know there's a lot going on right here, and so let's break it down. Just stay with me, okay? So first things first, I've got this longer term trend still down. So this is how we came to this conclusion. We've got this high right here, high here, and we still have not surpassed that trend line. Now, if we do that, then of course that would be bullish. Secondly, is that the daily trend, of course, is up. I mean, you can see it right here. We've got up, down, and up. Now, the bad thing for this price action right here is that we're coming into resistance of a couple areas. Number one, the trend line. Number two, this area right here. Arguably, this is where the leg started down. We had a down leg, up leg, and now a down. Here's that down leg, so it started right there. So that is a logical area of resistance. Second thing is that it is a possible wedge. And so we see one push up, got them labeled right here. 1, 2 pushes up, 3 pushes up. That is a wedge. And then finally, the fourth thing that I've got highlighted right here is a possible exhaustion gap. This is where they just said, okay, look, it's going up. Everybody, we got to get in it. And so that they buy, the last of the money comes into the market. And examples of exhaustion gaps, I don't have them here, but here's labeled, but here's one right here. You can see market gapped up to the upside. That was the last breath. And then right here, again, it gapped up to the upside, last breath. So don't know if that will be the case here, but it certainly could be. And so again, the longer term trend is still down, shorter term, and the longer term trend is down, and then the medium term trend is down, and the shorter term is up. So we'll see if they can flip it. We are looking for a pullback, and if we get that pullback, we'll see what kind of action we get from there, and then possibly buy in at that point. So there are 2 things that we're looking for this week. Number one, as far as the U.S. equities goes, we want to wait for a pullback. Once we see a pullback in the S&P 500, we're going to see a pullback in the sectors and then the styles like large cap, small cap, so forth, growth and value. So we'll see a pullback there. And then assuming we get the pullback and then we get a buy signal above that, the previous low in the S&P 500, a strong buy signal, then we're going to want to get involved there. We haven't seen that yet. Of course, the S&P is just we're in that first wave up on the weekly side in the S&P 500. So wait for a pullback there and then get involved on a buy signal after that. Second one is emerging markets. Last week we talked about it, didn't get involved last week, but this week we definitely want to get our toes wet, assuming it shapes up on Monday and Tuesday. So with that, that's the game plan coming into this week. Wait for a pullback in US equities, and then secondly, get involved in emerging markets. The last thing that I want to mention are those video ideas or the webinar ideas. Number one, term versus permanent insurance, which one is better? Secondly, different strategies to save for a child's college education. And then thirdly, the 3 signs that the stock market is getting wobbly. So if you have an interest in any of those, or you have an idea of your own that you'd like to share, I would love to hear from you. So if you do, put it in the comments section below. And then of course, if you like the video, thumbs up, subscribe. If you don't, it's okay, put a thumbs down. I want to know. With that, have a great day and great week. We'll talk to you next time.